Hello and welcome. This is a detailed altcoin analysis video for ticker symbol SNT, or the status network. It's rank number 47 amongst the cryptocurrencies, dated mid-afternoon, July 1st, 2018. Having a good day over the last 24 hours. Up close to 10% amongst all the main currencies of Bitcoin, US fiat currency, and Ethereum, and obviously all the other fiat currencies as well. And its market cap, about $250,000. Its volume, about 10% of that, and its circulating supply, 3 billion and 6 billion for its total. It's traded pretty much everywhere. A lot of these exchanges I've never heard of, let alone traded on. And the top ones, Bithumb and Upbit, but it's traded against the South Korean currency. And interestingly, one's 6.5 cents, one's 8.7. Don't know. I mean, you have to be in South Korea probably to trade that. But if you could buy it at 6.5 and sell it at over 8.5, that's an amazing arbitrage. Might be a situation where one of the wallets is offline, thus you can't transfer them. And just interestingly enough, the KRW is always a little more expensive than it is against the other fiat currencies in the world. All right then. So let's take a look at its charts. We'll go first against that of Bitcoin. And what we're going to do is we're going to take a look at the key Fibonacci. Of course, everything you do, it's your own risk, own reward. That should be the case, of course, amongst all of your decisions within the crypto field. But the price action, let's just first take a look at the gain. 200 and, we'll just say 300 Satoshis in the middle of such, close to 5,000. So about not quite a 20x gain. Very, very beautiful nonetheless. What I want to do is I want to focus on Fibonacci retracement. Overall, when it's all said and done, I'm going to go through this very quickly. Then I'm going to go through this not so quick, but it had multiple support tests here. Had a little bit of a rally. We can see how it broke down amongst this area here. This is what I call a significant pierce above. And it's definitely a headache no matter which of the three levels that you play. One is the aggressive one, which is, for me, if you think you see something breaking down, you're expecting it to go to 1621. Aggressive is a good pierce below, maybe somewhere like there, or maybe even a little higher, but just you got 1500 with the 1621, because it usually does extra. Normal one would be right around that 1621 number, maybe at exact, maybe a few basis points above it or below it. That would be the normal one. And the conservative method would be a pierce above. But technically speaking, you'd have to be really conservative to have managed to actually get that low. So it's an annoyance factor. Normally it works well within the orders for the most part. This is a situation where it pretty much would drive you nuts. Very large pierce above here, but not really, because it's an improper log scale as well. However, we'll take a look at that more in a minute or so. And here we can see it supported a little bit, resisting it, coming back down, another large pierce above. So it did it twice in a row. Okay, that's just how it works. And then you resist this area very nicely if you look at how Fibonacci analysis is to look. And then 3 times in a row, question mark in here. And as that stands, price action got down to about 870, 860 maybe, 860. So that's well over 30 basis points above the significant Fibonacci level. It's had a little rally. It's an attempt right now to revert the trend, given that it's had a significant move above the 18 of highs. That's most certainly enough to make that 18 go sideways. Will it hold it? I'm saying that with a question mark, of course. And I don't know the answer to that, but that's what I like to do, is always say stuff question mark based. And Fibonacci analysis will always have that come over and over. for if, say, something like this were to transpire, I'd be like, oh, this is looking like it's going to make a move to 1621. And then you're there. Now what? Question mark. And I say that as in, are we going to have a decent decline? We're going to have a retest towards the July or late June lows? Or is it going to be able to find a way to get above it? Because on a bullish level, when something like this is to happen, I expect more times than not on a bullish point for it to correct within this leather, either that via time or a higher low price correction, or even at times finding support at this level. So instead of resisting here for a bit, maybe a support's a bit. But if you ever have a situation where something doesn't find resistance where you're supposed to, same thing with support, it's not a surprise to have a really fast move to the next level. I'm not saying that's what's going to happen. I'm definitely not predicting that to happen. And this is analysis that works with every single coin, which is why I want to state it this way, because that's what I think these content is most important for, as it is anyway. And if it doesn't make that move, of course, move lower might mean continuation support amongst this 829 level. And then a failure here would mean a move down to the 550-ish or so point. Let's go back and take a look at this move with a shorter term time frame back then. And this would take us to the morning of January the 25th. And when we look at this from here, there's that pierce above that has that retest, as I was just stating before, that one of the maybes it might do. Well, this is where it did such. Finding the support in here, what did it do after such? It found a lower high rally. And just and removing these drawing tools with those little lines is not the fun thing to do. I wish there was a way on here where I could set it so that if I remove the drawing tools, it will not remove these lines. That's what I do not like about this platform, as it's really easy for me to just draw on ones where I don't have any. I can just draw and then just remove them all at one time. Anyway, so after you have a rally, you have another support test, but now it just after this play just does this sideways movement. Nothing too exciting. Definitely reason to give you concern that it could go down to the next level. And then sure enough it did. There was that failed buy order, but the move, of course, to that last Fibonacci point that had the rally higher. Now let's talk about the failed move, fast move, because at this point, just as I'm at, had a lot of warning signals that it was going to be going down further. Originally in here, you found the resistance, you came back down to near the 18 average of highs, thus it had a correctionary phase successful from that move. It had a second leg higher in here, and that leg higher was an interesting place where it rallied to, which was a previous key level of its last resistance point. So if you could successfully correct that move, which it did, and get above, which it did, that is super duper strong. As we can see, its correction successful in here. We can see its break above the established level of resistance that it had. Oftentimes from failed moves comes fast moves in the opposite direction. As you're seeing this, just a little bit of this chopping around from that move in there, definitely concerned reason, because mainly the fact that you really wanted to see this hold the 18, and when it fell below such just beforehand with that significant red move, well, that was that obviously was a weak or bearish point. And then it has this another little bit of a lower high rally, creating like a head and shoulders pattern, and then down it goes. Now this one, this is the Fibonacci situation where what I expect when we have a leg lower to a level or a leg higher to a level, for it to stop going up or down. In this case, stop going down. That's exactly what it did. As it got there and went sideways for a decent point, fell down it, and then you see the classic point of it resisting that level and then having its leg lower. So instead of having Good support. Well, it did have good support. It had good support, okay leg lower, good resistance, and then a move pierce above, albeit to that next point. And then just before in this move here, that's the thing about these cryptos. This is a spot where on this day, it opened at 13, no, it opened at 1282. Let's get the right day here. Okay, it opened at 1282 at high 1725. Difference of 440 plus basis points. So you're going to get these wild moves. Now, when you have it, how well is it going to hold? Where would you have wanted it to hold? Always the 18. But where was this key place in which it came from? I mean, it's okay to pierce extra, but it was very important, of course, to it to be able to hold past this level. And we can see that it kind of did. Had its move, but it resisted towards that level. And here we have that super duper move. It's continuing many higher lows. It had this move. It needed to correct it. Kind of did. Had this move here. Successful correction on the 18. And now it got above. See, this is where it would look super strong. Still, that's fine to have this higher low because this is a scary bunch of red moves. Oh no, it's over. Yeah, it could be. But what were the last key lows you were looking at? Really down to here. There was a few along the way. And even this might have been one of the key ones here. However, this would ultimately turn out to be where the failed breakout top could turn into placing into form, of course. The support test here multiple times at 1621, and then the big red and green moves happen, usually come from those key levels. And then this move here, just a lovely pierce above. I've already went through the analysis, I think, of this, but not on the 4 hour I haven't, so I'll go over that before moving this to the US dollar. So you've had this declining mode in here. Finally, it's had a good rally with all of this coming into place. So you want to see it hold the 18. And more importantly, it can go below it. But this area here, roughly at around 950 to 960, even 945 to 960 is the area I really would need to see it hold, because if I see that and I can see further momentum moving higher above the 1050, 1090 level, that I would get good reason for it to break above this high 1100 area and make a move up to well, maybe up to like the next move would be somewhere around from one leg higher on like a 4 hour chart would be about 1300 up to, of course, 1600. They can go up really fast with these cryptos, so that's something of worth note there. But if not, we're going to see one of those bear market rallies, and whenever you have a bear market rally and then it's going to fail within the 18, you can expect a decent leg lower once it falls from gives you indication of falling from such. And just a quick example of that would have been, of course, and I hate when that happens. This is where I'm trying to move the screen back to a few periods ago. But just to talk about what I'm mentioning here. As you can see here, where was the weakness? Right in there. So comes back down, fails to make a lower high. This was a red candle giving you the problematic warning signs, 2 periods with further warning. And then this big red candle is basically saying, yeah, this could be time for a nice leg lower, and it was. So thank you for, no, I'm not done. It's the heat here. So I'm going to finish this off with the US dollar. Let's just go time frame over time frame. So 4 hour time frame, obviously it had a double bottom in here. A double bottom is basically 2U or 2V formation shapes, sort of like in there. As it got above this neckline of resistance, of course, now that's a key area I need to see it hold on this move. It has resisted the 7.15 cent level. That's a key Fibonacci point. Let's take a look at this next, say on a 400-minute time frame. And I'm just waiting for it to load here. There we go. We can see how it had big support at that level. Let me just see how far. See, this is about halfway in between. So when I see something like this is basically telling me one of two things is going to occur. Either it's resisting that key area before it goes to the next one. The next one, of course, would be in here. Or it's going to be setting up the possible, we can call it a very nice, decent size failed breakdown or failed move. But in order for this to happen, it needs to successfully correct this range from about 5 cents to this current high. Thus, as I've stated, it really needs to hold this area. If you see it hold this area, start to rally higher, you expect a decent leg above the 7-cent mark. But if not, well, this would be another typical failed breakout, and you'd expect a fast move lower, and I'd expect a decent pierce below the 4-cent mark if it were to do that. And I say that because of how aggressively this came down here, and I'd expect a decent leg lower, thus breaking the key point by a good margin. And let's reset the scale and move this up to the daily. And there we can see perfect resistance from a key Fibonacci point. This was a spot at which was support. So it's sort of like I was mentioning, coming back to an area like this. That's exactly what happened in May. And when we look at this is pretty much all we're going to get anyway. So this would be about everything. Like always, if Bitcoin, Litecoin, Ethereum, all those things go up together, this will probably join the party. Let's go up, down, up and down together. Take care. Bye-bye.